What is up, team? We are back with some big updates here. So we're going to chat about a few things tonight, really short and sweet. The government shutdown, what that could mean to the markets and where it's currently at. We're going to chat about whether or not the overall markets are likely heading to a rally or possibly a downtrend. We will look into the public portfolio we're trading. So we're swing trading 10K and then pivoting that into long-term investments. And that should about cover it for tonight. So I'm Chris Blom from Blomonomics. If you're watching this, you are a Blomonomic economist, and we'll jump right into it. So the U.S. Senate passed funding bill that could end the government shutdown within days. Long story short, what this really means is that the Senate passed a temporary bill. So there was a 60-40 vote. So 52 Republicans had to persuade 8 Democrats to vote with them. And it passed. So it's going to go to the House tomorrow. If the House approves it, it will then go to Donald Trump to sign, and that could happen as early as tomorrow night or possibly Thursday. Don't get too comfortable because this only funds the government until January 30th, so another fight could hit, but it basically buys the government 2.5 months here. The idea behind ending the shutdown sounded like it was basically to avoid holiday travel chaos this year. Because if you've seen any of the news, the airports are slammed. A lot of the TSA workers are not getting paid, and so it was an idea to get ahead of some of the holiday efforts by the airport staff. Economically, the shutdown is estimated to have shaved about 0.8% of GDP off the year's earnings here, and that's roughly about $55 billion in lost output. So not great for GDP. However, when we dive into it, it looks like the markets didn't really care too much. We're looking at the SPX here. The NASDAQ looks very similar. We had that big dip with some of the news in Friday of last week. We've then come out of it. We've gapped up, and now we're sitting. It's actually better to look at a weekly chart here. We're now sitting right in the middle of this giant red candle of last week. So what we're really looking for here is structure, whether or not we're going to rally up and close above this all-time high at some point, and or break down and close below the wick of this candle, and that will likely tell us the direction the market's going to head. With the government shutdown ending, that's obviously very bullish news, as well as we're just riding off the coattails of the tech earnings, which happened over the last couple weeks. Amazon, Meta, Google, and so on, of the Mag 7 there, that were all quite positive. So today we're actually going to dive into a little bit of those earnings to walk through the financials. I'll show you what I look like when I look at like the financial sheets and what kind of matters most to me. And then we will definitely touch on Meta, which I believe could be a pretty good trade right now. We're going to head back to the daily chart. And for those who are not paying attention, Meta gapped down the other day after earnings. I believe it was about like 9 or 10%. Let's take a look here from the very top. That day it gapped down 14%, and now we're sitting at about 17% from where it sat no more than 2 weeks ago, which is pretty crazy for a company that size. Let's talk about why. So how I lay out a lot of my portfolios, this is the one I just built here for the public channel. I have all my stocks. I call it my roster. It's basically my watch list. I pick a couple stocks from a bunch of different sectors that I like to watch, and I basically become very, very familiar with them. Maybe on another video, I can actually walk through my list here, why I've chosen these stocks and kind of what I'm still watching about them. But today we'll talk about the Mag 7 here. So it's always good just create a folder with the Mag 7 just to keep a pulse on where the market is right now, to see whether or not we're having some good or bad days. So when we click into Meta, for example, we can scroll down. You'll see an earnings snapshot here. I'll kind of walk you through like what I believe matters most. So you have revenue, which is just their sales jumping. This is probably as a result of like ad demand, realistically, with Meta, maybe like the Reels monetization. You have operating expense. So this going up might not be perceived as a good thing, but essentially means that they're likely investing in things like AI, the metaverse, data centers, and so on. You have net income, so this is really bad, and this was because a one-time like tax bill that hit that they had to pay. So income went down, their profit margins went down because of that tax bill. This actually reads as a percentage, so 5.29 means, look at it, it's like 5.3%. So their profit is, for every dollar they made, they profited $5 cents. So not a super healthy profit margin, which I think spooked a lot of investors. You can also look at, I actually prefer to go down to cash flow. So this is like pretty rough here. Clearly the core business is still generating cash from operations, but what these mean is essentially that they are investing, either they're doing stock buybacks, which could be good. They could be investing on things like AI chips, data centers, servers, stuff like that. So this could be perceived as they're spending a ton of money to grow the business. I guess the bet you're taking is to hope that, it's that old saying, you got to spend money to make money. You hope that the money they spend will make money. And that's kind of the unknown that we have right now. You could compare this to Amazon, for example, on their earnings. So first thing you could look at here, where are we? Income statement. Pretty healthy across the board, as well as their net profit was 11%, so about double the profit that Meta was making on their products or their services here. And you look at cash flow as well. So Amazon's still dumping a lot of cash into growth, just not as much as Meta. So I think the kind of narrative here is that Meta might be taking a high risk for a high reward, and so investors don't love that. Like, they love stability, and because of that you saw this dip, even though the earnings were strong. Like, don't get me wrong, earnings were strong. They're still making a ton of money. Their business is growing revenue. Their profit was down, but they are still a growing company right now. So the question is, would I trade this? This is a tough one. I do think that there is going to be opportunity in Meta to climb back up, for sure. I think that this is a swing trade. Even just this cupping shape right here, if this continues, that is very bullish. So yes, I think there is a swing trade here. Would I invest long term into Meta right now? I guess you just have to think about like opportunity cost. You're kind of taking a high risk, high reward stance on whether or not you think that their investment is going to pay off, or you could invest in something comparatively like Amazon, which is like much healthier numbers right now, which might not be investing as much, but more stable growth. You could perceive it as something like that. So the question would be, is like, yeah, you could invest in Meta. Would it be better to invest in Amazon? I don't know. It really depends on your risk tolerance, but there could be a lot more upside here with Meta. For me, the way I look at this market right now is, I actually don't love investing in Mag 7 at these heights for the long term. I think that there's probably better opportunity in the market right now. If you just look at like the rally that these companies have made, it has been absolutely insane from that dip that we had. The dip that we had earlier this year was right here. But you even look since the big pullback here at the end of 2022, it's just been like pretty parabolic. I think there's probably better opportunity. And what I mean by that is, you look at, like, I have all the Vanguard sectors here. So we have tech, which was down a little bit today, consumer staples, you have healthcare, you have consumer discretionary, and then we have energy. I think that consumer staples and healthcare have kind of been left on the wayside a little bit. It's been really choppy. There's been a lot of consolidations here. Typically, these two sectors, consumer staples and healthcare, tend to do better during recessions. There is a lot of narrative out there right now about sort of a tech bubble, and I do believe that there's a lot of instability right now in the government, and these shutdowns are causing a lot of turmoil. We are still, for sure, in a bullish trend. We have not broken our bullish trend, but there's just like a lot of risks in the market right now. So I wouldn't be comfortable telling someone to like invest right now in the long term at these heights, unless they were gonna like set it, forget it, not look at their portfolio, not worry about downtrends, and then look back in their portfolio in 5 years and see where they're at. But for me, I guess the long story short is that I would probably start to actually look into the sectors of consumer staples and healthcare, find some good positions in there, because they tend to be a little bit more recession proof, and I feel like they've been sort of the forgotten sectors recently. So could be could be a good time to start to position and start to build a position in these portfolios if you're thinking about like sort of long-term investing. So I guess the summary here is government shutdown should be quite bullish. We've not yet broken the trend. We're sitting in this weekly candle right now, and we have to see which direction we go, whether we're going to rally or whether it's going to kind of turn down here. Mag 7, super strong earnings. That's really good for the markets. Meta could be a swing trade. Probably wouldn't hold it for the long term at these levels. I think you could even probably get better pricing if we did end up hitting a downturn, but who knows? So it's really gonna, it's gonna depend on your risk tolerance, investing in Meta versus something like investing in Amazon. Lastly, let's take a look at the public portfolio here. So opened up these trades last week. We're trading 10K publicly. We're swing trading and then pulling our profits and putting those into long-term investments. So right now we are sitting on Duolingo and a Celsius option. Duolingo we bought in at 184. Today it is sitting at 194. So we bought 50 stocks. We're up about $500, so 5% of the portfolio. And really what we're looking for is it to either rally up and hit this 250 mark, which is sort of our take profit zone, and or if it breaks down below 170, that is our stop loss. So we're sitting right in the middle of the bubble. We are just kind of subjects to the market right now. We're going to be patient. Hopefully the government shutdown ending here gives this thing a good kick. And then I did talk about another couple stocks in my last video. You can check it out. Celsius, James Hardie, and Netflix, which are some runners up on what I think could be some decent positions here. That's the update for today. We'll chat all tomorrow, and then we'll maybe cover my list of stocks here. Where is it? My roster, and I'll start to walk through why I'm watching these stocks, what I see in all of them, which ones I've been invested in, which one I'm kind of building positions in, both in my public portfolio and in my private portfolio. All right, thanks so much, team. We'll talk soon. Enjoy the trading day tomorrow.